Welcome to Market Mashup, our recap of financial markets and what we have in store for the month of June now that may impact your stock and bond portfolios. I'm Scott Nasca, President of Generation Capital Management. A strong month in the month of May as we recouped a lot of the losses from April. We had the Dow Jones that was up 2.3%, the S&P 500 was up 5%, and the Nasca was up 6.9%. So really a strong market across the board. For all of the sectors of the S&P 500, there was only one that was down for the month, and that was energy. So really a broad-based rally that we saw in May. Hopefully that will lead to another month of strong returns in June. Like I said, investors really decided to jump back on and take a little bit more risk with the technology stocks moving higher and the growth component moving higher. So the risk appetite was there for investors. On the bond front, strong market for bonds too in the month of May. Our bond prices went higher with interest rates lower and the credit spreads remained tight. So both of those conditions lead to a stronger bond market, and we saw, pretty much across all maturity spectrums, bonds leading higher for the month of May. So we had across the board strength in, pretty much stocks and bonds, which is also a positive. On the bond level front, we have the 2-year at 4.89%, the 10-year at 4.51%. So still, almost a 40 basis point inversion that we're seeing out there. Nothing has changed in terms of that. The Fed is maintaining the short end of the curve and they're keeping rates higher, whereas the economic and inflation front tends to have a greater impact on the longer end of the curve. We're still seeing an inverted curve out there, which could lead to more of an economic slowdown or recession going forward. In terms of some of the commodity fronts, we have oil at 81.62, that was down 6% for the month. And gold was at 23.48, which is a slight uptick in the prices of gold and continues a strong 2024 so far for the precious metal. In terms of some economic numbers, we had GDP came in at 1.6% for first quarter, first numbers that came out for that. Definitely lower than what we were seeing, over 3% growth that we've been seeing, so we are seeing some slowdowns in first quarter. Payrolls grew by 175,000 for the month of April, which is also a nice healthy number. We like to see employment numbers continue to stay high, and as long as the wage pressures aren't moving up as much, it's a positive sign for the economy. And also the Fed did leave target rates at 5.25 to 5.5 in their May meeting, with the same comments as looking at data going forward before they make any projections on rate cuts. Markets are anticipating some cuts potentially taking place in September or October, so you might start to see some actions moving in terms of the interest rates, especially on the shorter end of the market. If you have any questions, feel free to reach out to us, www.gencapmgmt.com. Our team's ready to answer any questions that you might have. Give your portfolios a second opinion. Just make sure the allocations meet your risk profile and goals and objectives. We love to help out, provide any input that we have because we know it is important. There's a lot of concerns out there amongst the investor community that they are saving enough for retirement and making sure that their allocations meet their needs going forward. We have a lot of financial planning topics out there with John's Top Tips if you want to take a look at that, and it could also spur some interest in terms of making sure your financial plan is all set. And if you don't have a financial plan, we'd be glad to help you out with that as well. So feel free to reach out to us. Once again, our team is ready to answer any questions you might have. I'm Scott Nasca, President of Generation Capital Management, and this is Market Mashup. Have a great month, everyone.